Good day to you guys. Good day, traders. Sure you're having a great time. Please, if you can hear me, I would like to get your response. How has been trading today? So far, I've not executed any trade because there is no setup. I've not seen my setup. Has it been at your end? What trade have you executed today and how did it go, or how is it going? Let me know in the comment section. I shared my expectations with you guys during the London session, during the morning session. I shared my expectation, and at the moment, the market had not retraced to my point of interest. So I'm still watching. By 2:30, a major news will be released from the United States, and I'm hoping by that time I would be able to find a good setup. Good afternoon, Mr. Joseph. Good afternoon, Victory. Good afternoon, Clement. Thanks for joining. So what's up? How has it been? Have you taken any trade today? Have you executed any trade today? Let me know in the comment section. Okay, I shared with you guys my expectations on GU and EU. Okay, so let's look at, like I said, the major news will be released by 2:30. You can see unemployment claim. So I'm hoping after the news is released, I would see opportunity to buy GU or EU. Okay, so that's my expectation. Okay, so let's see GU at the moment. Like I shared with you guys, I want to see price pull back to this area. I want to see price pull back to this area. Let's go to 1 hour. Let me delete all this. A few minutes, guys. Okay, so I want to see price pull back. I think this is the low for today's market. Let's see. Oh, where is the low? Where is the low for today's market? This is 4 a.m. I think, okay, this is the low for today's market. This is the low so far for today's market. Okay, so this is an equal low. As you know, this is an area of liquidity. This is an area of liquidity. So I want to see price pull back to fill this fear, this to clear liquidity reside now this previous low. That's my expectation, and that hasn't played out. That hasn't played out. Okay, as you can see here, shifting market structure has occurred, I think, on 15 minutes. Shifting market structure has occurred on 15 minutes. After the shifting market structure, we want to see price pull back to a discount area, and the tool we use in identifying discount and premium is the Fibonacci tool. Okay, so I want to see price pull back to discount, which is below Fibonacci level 50, which is below Fibonacci level 50. So price should pull back below Fibonacci level 50 before going bullish on GU. That's my take on GU. I'm still waiting for price to pull back to this zone before I would buy GU. I hope that is clear. And that was what I shared with you guys during the London session. So I've not taken any trades today. I've not executed any trade today. Price should pull back. If it doesn't pull back to this zone, if price doesn't pull back to this zone, for example, if the news favored dollar, if the news is positive for the dollar, then there's a high probability to pull back to this zone. Okay, right? Yeah, there's a high probability that to pull back. But if it is negative, if the news comes out negative, if the difference between the actual and the forecast is much, if the difference is much, it's most likely price will not pull back to this area of interest. Okay, it's possible price will not pull back to this area of interest. So I might be considering buying if there is a breakout from this resistance that has been created, this resistance. A 15 minutes should close above this resistance. I might consider going bullish, but the best entry point would be this area. But if the news is positive or negative, if it is negative for the dollar, price might just keep going bullish. It might not retrace. Remember, everything in trading is probability. Okay? So that is my take on GBP USD at the moment. So wait for the data to be released. If it comes out negative, then G will just keep going bullish. So if I'm going to take a buy, I need to consider the risk involved. If I'm going to take a buy from this point, let's assume a 15 minutes candle that will close above, will close at this price. I decide to buy. My stop loss will be this low. This is about 60, close to 60 pips, 60 pip risk. Okay, 60 pip risk. But if price pulls back to this zone, to this area, and I decide to buy from this area, my stop loss will be, you can see, let's say 30 pips. 30 pips. So if I decide to buy above this zone, I think I will go in with maybe 70%. 70% of the lot size I normally would use on a trade that the risk is between 30 and 40. So let's say the risk or the lot size I apply on a trade is 0.1 lot size. I can go in with 0.07 lot size. Okay, I can go in with 0.07 lot size. And if the price pulls back after breaking out from this high, if price pulls back to this area, I will go in with the remaining 0.03 lot size. I hope you're getting me. I will go in with 0.03 lot size. So if the risk I want to take on the trade is $70, let's say the risk I want to take is $100, I will go in with $70 if price breaks out from this high. And if price pulls back to this area, I go in with the remaining $30. I hope you're getting me. So that's how I'm going to trade GBP USD. Let's look at Euro USD. Any question? If there's any pair you want us to look at together, please drop it in the comment section. Let me, so I can attend to it. So Euro USD also, you can see this fair value gap that was created as shifting market structure occur on 15 minutes. The shifting market structure, I think it has occurred. Let's see. Okay, so you can see 15 minutes closed above the most recent lower high. You can see, so the shifting market structure has occurred here. Okay, so after the shifting market structure, I want to see price pull back to an area of imbalance, which is a fair value gap. And the fair value gap should be at discount. The fair value gap should be at discount. You can see that. So I want to see price pull back to this fair value gap. You can see this fair value gap. Okay, so that's my expectation on Euro USD. The setup on Euro USD looks better than that of GBP USD. It looks better than that of GBP USD. So if it pulls back to this area, stop loss will be, let's say, 20 pips. Set stop loss few pips below the low of this candle. I've shared with you guys the reason or the importance of setting your stop loss few pips below the low of the candle. This low is an area of liquidity. They might still want to come on for the stop losses residing at this low. That is why you should set your stop loss few pips below this low. For example, if you decide this is an area of liquidity, this is a swing low, this is an area of liquidity, they can still come for the stop losses here. They can come for the stop losses residing at this low. So let's say you want to use this low as your stop loss. Let's say you want to use this low as your stop loss. You should set your stop loss 10 pips, at least 10 pips below this level. If you want to use this, your stop loss should be 10 pips below this level. If you're using this, your stop loss should be 10 pips below this level. You also ensure that your risk reward is 1 to 2. Your risk reward shouldn't go below 1 to 2. Now, sometimes the market will not hit your TP using 1:2. Sometimes, depending on the number of pips. Let's say you're risking 50 pips. If the risk on the trade is 50 pips, sometimes the market might not give you 100 pips. The market might just move in your direction 70 pips or 80 pips and retrace. So what you need to do in that case is to trail your stop. What you need to do is to trail your stop. For example, if you take a risk of 50 pips on a trade and the market moves in your direction 70 pips, you should adjust your stop loss to break even. You should adjust your stop loss to break even. You don't want to be looking at the market pull back, to your entry level and go ahead and, still go down to hit your stop loss. It won't make sense. So you trail your stop as the market is moving in your direction. You trail your stop. That is how I manage my trades. Mr. Raphael, good afternoon. Afternoon. So let's wait. I believe there will be some reactions after the major news is released. I believe there will be some reactions after the major news is released. So you need to patiently wait for that news to be released unless you're comfortable taking the risk. If you buy from this point, your stop loss will be at this level. That is about 50 pips. If you are comfortable taking the risk, 50 pip, then you can go ahead if price breaks out from this high. This is the most recent high on EU. If 15 minutes candle close above this high, you might want to risk buying. You might want to risk buying from that point. Okay. You might want to risk buying from that point. Okay, gold, like I shared with you guys in the morning, it is still bullish. Gold is still bullish. Gold is still bullish. Don't sell gold. Gold is still bullish. Okay, every sell you see on gold is a retracement. Every sell you see on gold, every sell pattern you see on gold is a retracement. Okay, so if you want to buy gold, where do we have the most recent swing low, swing high? So you can see this is the most recent swing low, and this is the most recent swing high. You can see shifting market structure occurred at this point. You can see shifting market structure occurred here. You can see that. Some would say breakout from resistance. Yeah, this is a breakout from a resistance. Okay, breakout from resistance. Okay, so you could apply your Fibonacci from this swing low to this swing high. Okay, wait for price to pull back to a discount area, which is below level 50, and below level 50 we can identify. You can see this fair value gap. You can see this fair value gap. So this will be a very good area to consider buying. This zone would be a good zone to consider buying. Consider buying gold. Gold is still bullish. Don't risk selling gold. Don't risk selling gold. I hope that is clear. I hope that is clear. Any question, any question, any question? Let's just see what's happening on DXY. Let's see what's happening on DXY. See what's happening on DXY. Any question, any question, any question? Williams, afternoon, afternoon. Thanks for joining. You have any question? Okay, so this is DXY charts. Okay, so you can see DXY is bearish at the moment. DXY, as you can see, DXY is bearish at the moment, but you can see DXY created. Okay, let's start with the daily. Let's start with the daily. Okay, you can see yesterday candle. You can see the high of yesterday was a previous, I think it was a previous resistance. Can you see that? Okay, so if you go back here, you can see we had a resistance here, and also at this point we had a support which became a resistance. Okay, you can see that. Okay, this was a resistance which became, so price tested this support which became a resistance, and the candlestick pattern that formed is a bearish reversal pattern. This is a spinning top. Now let's go down to 4 hour. So on 4 hour, what do we have? You can see up here on 4 hour, the candlestick pattern that formed. This, should we call this a shooting star? A shooting star. This is a shooting star. You can see yesterday, and you can see a fair value gap has been created. So I would have loved to see DXY pull back to this fair value gap before selling, before going bearish on DXY. I hope you're getting me. I would love to see DXY pull back to fill this fair value gap before going bearish. That's my expectation on DXY. Now, if DXY is dollar index. If dollar index is bearish, it indicates that the dollar is weak. If dollar index is bearish, it indicates that the dollar is weak. If dollar index is bullish, it indicates that the dollar is strong. Are you getting me? It indicates that the dollar is strong. So if the dollar is strong, if you're trading foreign currencies, GBP USD, Euro USD, NZD USD, if the dollar is strong, it means you would sell those pairs. Those pairs that have US dollar as counter, you will sell them. And those that have USD as base, you would buy because the dollar is strong. But if the dollar is weak, you will buy those pairs that have dollar as counter. You will buy them and you would sell pairs that have USD as the base. I hope that is clear. I'm hoping dollar index is going to pull back to fill this fair value gap. If it does not fill this fair value gap, it means I would have missed the move on GU EU if it does not pull back. That's my expectation. I hope that is clear. So that's my take. Is there any other pair you want us to look at? Let me know in the comment section. As you know, Australian dollar USD is positively correlated with GBP USD. It's positively correlated. 80% or 70% of the time, these pairs move in the same direction. They move in the same direction. So what am I looking at here on Australian dollar USD? Australian dollar USD on the 4-hour time frame has created a fair value gap here. Okay, that's created a fair value gap here. This is 4-hour. Okay, and I think there's a breakout from a resistance on a 4-hour time frame. You can see this resistance that was created, I think, on Monday or Tuesday. This resistance that was created on Monday and Tuesday has been cleared. You can see this candle broke out from it. This tells me that demand for Australian dollar is higher than that of the USD. The demand for Australian dollar is higher than that of the USD. So the Australian dollar is bullish at the moment. Is bullish at the moment. But I want to see price pull back. Price should pull back to fill this fair value gap before going bullish. For those who have entered, who expected buy earlier after the formation of this candle, good for you. Okay, good for you. If you have entered buy, the best entry for buy on Australian dollar USD would have been, you can see this pattern here. This would have been the best entry. You can see we had a bullish reversal pattern here. Can you see this? This is an hammer. This is an hammer. The next candlestick close bullish. This would have been the best entry for Australian dollar USD, and the market is currently trading how many pips above this level? How many pips? About 40 pips above this level. So if you had entered buy from this point, by now you would have made 40 pips, and the risk you would have taken on this trade would have been, let's say, 20 pip. So you would have made 1 to 2 risk reward on this trade. But if you are taking a trade from the current market price, your risk is high. Your risk is high. So I would suggest you wait for price to pull back. Wait for price to pull back to a discount area. Wait for price to pull back to a discount area before you go bullish on Australian dollar USD. I hope that is clear. Gold is still bullish. I just shared my analysis on gold. Gold is still bullish, but wait for retracements before you buy gold. Gold is still bullish. Like I said, wait for price to pull back to this fair value gap. Let this fair value gap be filled before you consider buying gold. That's my take. Gold is still bullish. It's still bullish. Most of the institutions and billionaires, okay, the big investors, they would prefer investing in gold at the moment. They will prefer investing in gold at the moment. Instead of investing in the dollar, they will invest in gold, okay, at the moment, because there's so much uncertainty about the US economy. There's so much uncertainty about the US economy at the moment. At the moment, many don't know what Trump is up to at the moment, so they'll prefer to invest in gold. That is why gold is bullish. Okay, that is why gold is bullish at the moment. Okay. Any question, any question, any question, any question, any question, any question, let me know, let me know. I will be teaching the basics of Forex tomorrow for those who are new to trading. You want to learn the basics of Forex trading, you should join the session tomorrow. I will be having a Zoom session tomorrow by 8 p.m. If you know anyone who would like to learn how to trade Forex, those who can't afford to pay for mentorship, let them attend the class. Let them attend the class tomorrow by 8 p.m. 8 p.m. tomorrow for new traders, please. New traders, not for experienced traders. New traders. I'm going to be covering the basics of Forex. So if you have anyone who's interested in learning how to trade, let them attend the class tomorrow. GJ Bias, GJ. Okay, let's look at GJ. GJ. Okay. So what am I seeing on GJ? What am I seeing on GJ? Let's start with the daily. Okay. So GJ has been bearish since on Tuesday. It's been bearish. Okay, it's been bearish. So you shouldn't be selling GJ at the moment. Though it is bearish, don't sell. This is where you should have entered sell on GJ. This should have been the best entry. You can see we had a spinning top here. You can see this is a spinning top. Okay, let me start with the daily time frame. So you can see this would have been a good entry for GJ. I shared this with you guys during the weekend session we had. But unfortunately, I missed this move on GJ. I missed this bearish move. I was expecting GJ to sell. I was expecting GJ to sell, but I missed the move. I didn't catch the move. So I just have to let it go. So this would have been the best entry for GJ. You can see this would have been the best entry. And now the market is trading far below that level. You can see 256 pips below that level. This is where you should have entered. So if you didn't sell at this point, why would you want to sell here? It doesn't make sense. So you should wait for price to retrace. Wait for a pullback. Okay, that's my take on GJ. Don't sell now. If you want to sell, wait for price to pull back. Okay, you can see we have a fair value gap here, and I think we have a fair value gap here. So wait for price to pull back. At least price should do 50% retracement before you consider taking a sell trade. You can't sell now. Okay, so wait for price to at least pull back to equilibrium before you sell. Okay, so as you can see also, my fear is this fair value gap here. This fair value gap here. It might want to fill this fair value gap before going bullish. You can see it has not filled this fair value gap. It's just tested. You can see it has not filled this fair value gap. So that's my fear on GJ. Okay, it might fill this fair value gap before going bullish. Are you getting me? It might fill this fair value gap before going bullish. So at the moment, I'm not seeing the opportunity to buy or sell on GJ. Okay. If you want to buy, if you want to trade the pullback, you want to take advantage of the pullback, let's go down to 15 minutes. So you can see the shifting market structure on GJ was supposed to occur at this point, and that has not occurred. So we cannot, this is the most recent lower high. You can see there was no shift in market structure. So before you consider buying, you must ensure that price closes above this level. The market is trading above this level before you consider buying. That's my take on GJ. You cannot buy now. I hope that is clear. I hope that is clear. That's my take on GJ. Don't sell GJ now. You could look for buy opportunity. It has to retrace. It has to retrace before going bearish. It has to retrace. It has to pull back. So wait for that retracement. If you want to sell, wait for that retracement. If you want to buy, wait for a shift in market structure before you buy. Okay, so how many minutes left for news to be released? Let's see, less than 2 minutes. Less than 2 minutes. Okay, less than 2 minutes. So let's wait for the data to be released, then we'll see how the markets react to the news. Any question while we wait for the news to be released? If you have any question, drop it in the comment section. Let's see Euro Aussie. Let's see Euro Aussie. What's happening on Euro Aussie? Euro Aussie. Okay, so Euro Aussie has been bearish for days now. Yeah, it's been bearish. It's been bearish. So you can see on Euro Aussie, we have a fair value gap here. There's a high probability it will fill this fair value gap before going bullish. Okay, so I wouldn't advise that you sell at the moment. You can see this is where you should have entered sell on. You can see this is where you can see after the formation of this shooting star. After the formation of this shooting star, that is where you should have entered sell. That would have been a good entry. After the formation of this shooting star, this is a bullish shooting star, which indicates change in trend from bullish to bearish. Now, if you go down to 4 hour, you'll be able to identify a valid bearish reversal pattern. You can see what we had here. You can see. So this is where you should have entered sell. After the close of this candle, this is where you should have entered sell. If you had not taken, which is 74 pips, and by now you would have made close to 170 pips. $219. The previous was 215, and unemployment claim is 219, which is higher than the forecast. This is negative. Yeah, this is negative for the dollar. This is negative. This should be negative for the dollar. This should be negative for the dollar. The actual is higher than forecast. Remember, this is unemployment claim. This is not employment change. Unemployment claims. So this value is higher than this. So this should be negative for the dollar. This is negative for the dollar. Let's see what's happening on GU. Okay. This is negative for the dollar. Let's see. Let's see what's happening on DXY. I doubt if this retracement would occur. I doubt if the retracement would occur because the fundamental is negative for the dollar. Is negative for the dollar. Would the retracement occur? I doubt. I doubt. Okay, I doubt. Let's see. Buying from this point. Let's wait. Let's wait. Be patient. Wait for a retracement. That is what I would suggest. Wait for a retracement. Price should retrace. That's what I would suggest. It's negative for the dollar. Let's see Euro USD. It's negative for the dollar, but wait for a retracement. That is what I would suggest. Wait for a retracement before you go bullish. That is clear. So that is it. That is it. Any question? Any question? Any question? Any question? You can see negative for the dollar. USD is bearish. Let's see, bearish. So I'll suggest you wait. Let's wait for a little retracement. Wait for a little retracement before you buy. Okay, like I said, the 15 minutes candle close above this area, one might consider taking a risk. If you're trading with a lot size above 0.01, you might want to go in with small lot size. Okay, wait for going with small lot size. If you're trading with 0.04, for example, you can go in with 0.02. That is if 15 minutes candle closes above this. And if price pulls back to fill this fair value gap or pulls back to this discount area, you can go in with more lot size. I hope that is clear. I hope that is clear. So I think that will be it for today's New York session. New York session. That will be it. Any question, any question, any question, any question. So, like I shared with you guys, like I told you guys, when we have fundamentals, I'll be coming on live on YouTube. Okay, so if this is your first time participating, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. And also, you should subscribe to the channel. And I want to believe you guys have liked this stream. If you're yet to like this stream, please do so that others can get to see this video. Okay. So if price will not pull back to that, so you can see on 5 minutes before the news was released, we have a fair value gap here. So if price will not pull back to that zone identified on 15 minutes, you have a fair value gap here you can work with. Okay, this is the recent fair value gap that was created before the news was released. So if price will not pull back to this area, at least it should pull back and fill this fair value gap before continuing with its bullish move. So that's my take. That's my take. Please, you guys should give this stream a thumbs up. Give it a thumbs up. I appreciate you guys. So I think that will be all if there are no questions. That will be all if there are no questions. Any question? Do you have any question? Let me know in the comment section. Any question? You're welcome, Victory. You're welcome. Thanks for joining. Thanks for your participation. I appreciate you. All right. No questions. No questions. All right. Do enjoy the rest of the day.